It was quite well known that Liz Truss would not have an easy start. She's taken over the reins of the United Kingdom at a tough time. She's inherited the cost of living crisis, which already made her unpopular, but steps taken by her government late last week have not only sent the stock markets reeling, it's also driven the pound sterling to a record low against the dollar. Let's not forget that the close to 10% inflation the country is reeling under and soaring interest rates to help fight these bleak macro data has worsened the situation. So what really has happened? Why is the UK suddenly in a crisis? Why are people talking about recession? Why in the latest news have large lenders decided to review their mortgage deals? So here's what happened. Her government took the step of announcing a mini budget last Friday, which included a bailout for energy prices, so a cap on how much households will pay for energy. You can call it a subsidy of sorts. This is for businesses as well. Apart from this, they unveiled a sweeping set of tax cuts, from income tax, personal income tax cuts to business tax cuts as well. And how will you fund all of this is the evergreen question. So Liz Truss's way of coming out of this recession, this tough economic period, is by spending more. So all of this, of course, will be funded by additional borrowing. It's not something the markets have liked. All this has taken UK's public net debt at 96.6% of GDP, leaving experts to believe that the UK economy is hitting tough times. So how did Britain get here, and what's next for the sixth largest country in terms of GDP? Will it have an impact on India UK trade as well, and what about Indian companies doing business in the UK? We're speaking about a host of these issues. To talk on this, I'm joined today by Ajay Srivastava, market expert, Peter Cardillo, chief market economist at Spartan Capital Securities, and Paul Hickin, director at S&P Global Commodities Insights, also joining us. Welcome to all of you, and thanks so much for speaking with us on the India development debate. Ajay, let me begin with you. Great to have you back on the show. Tell us in the simplest possible terms what we're seeing in the UK. Is this a man-made disaster of sorts? Because all of Europe is reeling with most of the same issues, high costs of gas. But the UK seems to have made its own situation even worse. Ajay, can you hear me? All right, I'm not sure Ajay can hear us. I'll come back to him. Meanwhile, let me come to you, Peter Cardillo, and just that basic question. Has the United Kingdom, through its policy announcements, made a bad situation even worse?
Exactly. And we're seeing that with the collapse of the pound, which probably is headed lower. At this point, the speculators have it the speculators are in the driving seat, and that just simply means that we're probably going to see the pound slip under parity, and for fundamental reasons as well. The mini budget that was presented obviously could induce even higher inflation. Let's not forget that inflation is soaring in Great Britain and throughout Europe as well, due to the energy crisis. And so that's why the market is very skeptical of this new government, and the pressure is on the British pound.
Paul Hickins, do you think that the markets are being a little tough on Liz Truss because she's talking about what a lot of economies are actually trying to do? First things first, cushion the public from very high energy costs. But is the real problem that no one's clear how she's going to fund all of this?
It is, and I think the real question, the real problem she's got is a crisis of credibility, in the sense that what the market is seeing is that the central bank is tightening monetary policy and the government is loosening fiscal policy, which is almost like pressing one person pressing the accelerator while the other one's pressing the brake. And I think at the moment the market sees, the perception of the market is one of that the inflation needs to be curbed, that is the biggest threat, even if it's at the detriment of economic growth. Again, it's it's which way do you go? Do you try and keep growth going and boost inflation? But I think the markets and economies are very worried that inflation will get out of control, especially what we're seeing in the commodity markets, especially across the commodity markets, across metals, energy, the inputs that are going into the metal situation. And that is having a big impact on the way the market is viewing the policy decisions being made.
Paul, just to follow up there, do you expect this turmoil to sort of stabilize as the Bank of England steps in and maybe brings calm? I was just reading the latest reports that lenders are reviewing their mortgage rates because rates are expected. The basic interest rate is expected to go from 2.25%, perhaps as high as 6%. So do you think it's going to take some time for the situation to calm down, or will we see, a Bank of England action perhaps calming nerves much quicker?
Well, I think that's what the markets want, is that they want to see some sterner words and sterner action from the Bank of England. We've seen that with the Fed, where they've been ramping up rates, leading the way in the interest rate rises, and the hawkish tone they've been administering. So that is the same. That is the situation which the markets are hoping to see from the central bank. But at the same time, there is still what I say, this credibility question about if the government are doing one thing and the central bank's doing another, how that is read by the market.
Let me come to you on this point, and it's seeming to be, of course, we're focusing on UK today, but it's also a larger Europe problem at this point, isn't it? And is it as simple as a policy decision which seemed to have backfired?
I think that is the question to me.
It's to you, Peter.
Yeah, I think what I agree with your other guest that Great Britain is going through a big confidence crisis, and the fact that the pound is so low, and that the Bank of England is probably going to have an emergency meeting and raise rates by 100 basis points is probably a little bit too little at this time. The crisis has gotten so out of hand that, as I said before, now to a certain degree lies within the hands of the speculators. And when that happens, it takes some real tough decisions by the central bank to really calm the market. So, yeah, if they raise by 100 basis points, we'll probably see some sort of a relief rally in the British pound. But I think it's not going to be long lasting. So the fact that this mini budget calls for lower taxes across the board, that in itself, in a time of crises that we face now, so with high energy prices, that could be perceived as worsening the inflation situation, and so therefore, the Bank of England is going to have to take some harsh measures, and that just simply means a steep recession for the United Kingdom.
That's the fear, a steep recession for the United Kingdom. Ajay Srivastava now with us, and Pat, we've got that audio problem sorted. Ajay, I hope you can hear me. I was saying it's great to have you back on the show on what I think is a very important issue to understand. What exactly did UK do? Is it becoming a sort of a cautionary tale where more and more countries are understanding you can't buy your way or spend your way out of a tough economic crisis?
Well, let's not be harsh about on the management. I think they just come in and they have just taken a couple of decisions. I think, just to assume that it runs against the grain of logic that everybody is propounding just because equity markets are in turmoil. Well, yes, they could have communicated better. But I think I would like to give them a chance for the three things. One is that they are ensuring that the people are cared for. I think that's the most important thing of any policy of any country. That's the most important thing. Number two is they are paying the price for maybe the stupid decision of Europeans to get onto the gas bandwagon, which Donald Trump warned them, and the so-called professional politicians scoffed at him and said, he's just, raising a flag when he said you're depending too much on the gas from Russia. The piper has come home now and they're going to pay the price for it. Number three is, yes, there is a compounding issue in terms of giving us so many benefits, tax cuts in that order, and then you have a deficit, the pound going for a toss at this point of time. I think market has been harsh on them, to be honest, at this point of time. Time will tell whether part of the strategy pays off or not. Not that the US has done anything better or worse at this point of time. Look at the chaos in the US. They have killed the world market at the end of the day. What has happened from the US. So I think give UK a chance. I think they're doing something right. I think they're protecting the people, which is the first order of the day. The pound will take care of itself eventually when it comes. Interest rate will go up to 6% and they will kind of get it back. I think it's just a premature judgment on a new government. And it's a young lady who's there in the part. It's easy to pick up stones and throw all of them around. I think the same thing, nobody's talking about Angela Merkel doing what did with the gas for this thing. Nobody's talking about what Biden has done to the world with his economy, what this thing is. So I think give the lady a chance.
Interesting perspective. Give the lady a chance. Why are you picking on a young lady who has just come in and, trying to do what everyone else is doing? Well, to be fair, this is not the only economy which is focusing on cushioning the blow to the common man and woman. Paul Hickin, your response to some of the points that Ajay Srivastava has made?
Yeah, what I would say is it's fair to say that it is a global problem. The inflation is what we're talking about. This energy crisis, it's a global problem. Inflation across the globe. India may be a little bit separate, slightly outlier where it's at, but the rest of the world is either in a severe slowdown or going through a recession. UK is at the brunt of that, but at the same time, it was a fair point about the energy crisis. It's a European energy crisis. It's gas prices went up in August to more than 500%. It's astronomical. Oil has been extremely high. Both oil and gas have come off, but this is unprecedented energy prices time, and that not only has an impact right then and there on energy bills. That they've had to try and top up storage and fill storage tanks across Europe, and to try and provide some security of supply in the absence of the questions over Russia. So that is feeding, and that's going to continue to knock on into industry as energy feeds into input costs, into across the board, into metals and mining across the board. So there is that inflationary problem, and it is a much wider issue for the markets. It's just that, unfortunately, I would say that the UK is at the brunt of that in a little way, and it has gone into a little bit more of a recession earlier than some of the others for various reasons.
We were playing out what Rishi Sunak said a few weeks ago, and he's suddenly trending everywhere with a very "I told you so" kind of a prophecy, where he has said you can't buy your way. I mean, he's talked about this entire plan as Liz Truss's fairy tale. Ajay Srivastava, in hindsight, is Rishi Sunak's very clear policy, even though it was unpopular, saying you can't spend your way out of a recession, proving to be true?
Well, it's nice to be prophetic when he was the man responsible. He was the chancellor who handed over this situation to the present government. He caused the demise of the government. It's very nice to be prophetic today. But can I ask Mr. Sunak, you were the chancellor. What did you do in the last 24 months? You were seeing the energy crisis coming. You were seeing the people are getting hit. You changed the rate taxes in the UK government, and it was terribly unpopular to raise the tax at that point of time. So it's nice to be prophetic when you have caused the problem, and now you are preaching to say that, listen, I told you so. Gentlemen, Mr. Sunak, you were the chancellor. You have given the economy where it is today, and the new government will have to take it from what you gave to her and move on from there. So I think, I would take it with a pinch of salt, because that gentleman knew very well the economy was precarious, still brought the government down for whatever reason. He could have waited and said, listen, we got a problem on the economy. The last thing we want is a diversion in terms of a new prime minister elections. And he would have been more mature about letting him as the chancellor correct what he think was the right path for UK, and then done what he did with Boris Johnson after a point of time. He didn't about UK. He didn't worry about economy. He didn't worry about taxes. He went and brought the government down, knowing fully well how precarious the situation was. So I would really discount what he's saying. I think he's a bigger culprit perhaps than anybody in the system, because knowing fully well as the chancellor what the true state of the US economy was, UK economy was, he still diverted all the attention to bringing the government down. That's not responsible by any standard. And I think we need to hold that to him to say, listen, forget the prognostication about whether he's right or wrong. The fact is, gentlemen, you knew about it. You caused the crisis. You brought the government down, put 1 year of attention away from the economic problem. And now you prophesize that, listen, I told you so. Not a good deal, my friend. Not a good deal.
We're expecting Rishi Sunak not to behave as a politician. At the end of the day, he is. And perhaps that fuels those actions as well. Peter, your take on how quickly the UK can climb out of this and the lessons for the rest of Europe as well. Because even while we're focusing today on UK, all the news from the rest of Europe is not sounding too great. You have the Nord Stream leak, which is dominating discussions right now. It's sending gas prices skyrocketing even further. So this high gas price problem is going to persist for a bit, isn't it?
Absolutely. The only cure for that is, is to raise rates like it's happening here in the States. And that just simply means a global recession is not far away. And, I just want to chime in on the fact of spending your way out of a crisis. Well, that's exactly what happened here in the States during the COVID crises, that the Fed and, of course, fiscal policy was very loose. And that created the inflation mess that we're in today. And that's created havoc in the capital markets and, of course, in the stock market.
Ajay, just a word from you on the larger European crisis. And now the fact that the word recession is being thrown about with a lot more certainty. Winter is coming, high interest rates are coming. Is recession also coming? Ajay, the question's for you.
I think, recession is a relative term depending on where you are in the economic cycle. If you look at India, for instance, and you look at US and UK, I've just traveled, come back, okay? You don't see recession on the streets. People, the relatively richer people are doing quite well. The shoppings are full, the restaurants are full, the hotels rates are absolutely crazy. Absolutely. Try getting a flight into UK or getting out of UK on a business class ticket. You will not find it. You can get an easy jet of 25 pounds, but try taking a flight to Singapore on a business class and you cannot get it. So, recession to me is always relative. And what we have in economy today, Tamanna, is the fact that the top 5%, where is the recession? The luxury purchases, sales are at a historic highs at this point of time. So, the classic definition of recession used to be economy going in, but economy is not the same for everybody. Today, for a lot of people in India, for instance, don't see what's the recession all about. They're spending money. They're giving 25,000 rupees for a hotel charge. The same happening in UK. See what's happening in Qatar. See what's happening in Singapore right now for the Formula One weekend. I think recession is today for the bottom 40-50% of the population, the working class, who really have got a very fixed income. And good or bad, at the end of the day, they are a little marginal out of the economic system. So the traditional impact of recession, we don't see on many companies at this point of time. And I think that's the truth which we have to honor with, that let's not get worried about the so-called classical definition of recession, because the rich people, the relatively better people are still have enough firepower, still spending money, making money. So I'm not too worried about recession. I think I'm only worried about one day in the sun. The central banks have killed the savers around the world. Look at the negative interest rate now for savers for, I think, almost a decade now. For the first time, there is a glimmer of hope that they will have a positive saving rate. And I think that's the key point. If they can do that, all the recession fears will be over, because the bottom end of the startup, which save for the future, the 401ks or whatever pension funds and fixed deposit, etc., they will finally see some interest benefit coming for them. They have been the worst sufferers, and European interest rate, we all know, was zero.
That's actually an interesting way.
Bank.
That's an interesting way of looking at it. We look at it from the equity point of view, but for savers, it's finally a good time. It's finally a good time. Their money in saving deposits is going to mean for something. Paul Hickin, quick word on all of these silver linings that Ajay Srivastava is seeing among those gloomy clouds.
First of all, inflation erodes wealth, so I'm not so sure that that's strictly true. But what I would say is that the foresight, when we had the big commodities boom, what Peter was talking about, we had this commodities boom and we had this fiscal stimulus package, 14 trillion back in the day across the globe to spend money to get the economy out of a COVID crisis. It's hard to often predict when peaks happen and when bubbles are emerging. But clearly at the start of this year, even before the Russia crisis and the energy crisis, which accelerated the commodities boom and the prices in commodities, is that there was already this situation where prices were overheating, and the policy moves could have come in earlier, but no policymakers ever like to derail or curb the good times, and that's always the problem, the boom and bust cycles we're suffering, and this is another classic example, accelerated by COVID.
Absolutely. So this is going to be a big story to watch. It's nowhere near its end. We have to see what's happening in the rest of Europe. A report just yesterday said the largest economy in Europe, Germany, may face a recession. There are worries in Italy as well after a new government has come into play. So definitely a space to watch. Thank you so much, Peter Cardillo, Paul Hickin and Ajay Srivastava for joining us this evening.